Hi, my name's Allison Bishop. I am a certified public accountant and a financial coach in Portland, Maine. And today I want to talk to you briefly about life insurance. So the first question is, who needs life insurance? And the answer to that is, if someone depends on you financially, you need life insurance to protect them in the event that you die. And so often that means minor children. It could be your spouse. If maybe you guys have a mortgage that your spouse would struggle to pay on their own. And so that you would want that to be paid off in the event that you died. Or you could be taking care of an elderly relative or something like that. In all those cases, somebody depends on you and you need life insurance. So the second question is, what kind of life insurance? There are two kinds of life insurance. The first is called term life and the second is permanent. Term life insurance is just like most other kinds of insurance, like car insurance, health insurance. You pay a premium for a year and you're covered for the term for that year. So that if you die during that year, your beneficiaries would get the payout. If you don't, your relationship with the insurance company is over. You didn't die, you paid your premium, you're done. Permanent life insurance has more of a savings and investing element to it, which means that the insurance policy builds cash value, which you can actually access. Once you've had it for decades, there's some value in it, and you can actually access that before you die. And permanent life insurance includes things like whole life, universal life. There's variable universal life. There's a whole variety of different kinds of permanent life insurance. So it kind of sounds like a no-brainer, right? Because why would you pay for just coverage for 1 year when you can build up a cash value and have access to that in your later years? And the really easy answer to that is cost. Because term life insurance is pretty inexpensive, and permanent life insurance, whole life or universal life, costs 10 to 20 times the amount of term life. And so most financial experts, unless they're selling you permanent life insurance, will say buy term life insurance, and then whatever the difference is, whatever you're saving in premium, invest that on your own, and you're probably going to be better off. Term life insurance, for example, might be, it varies widely based on your age and your gender, but it might be $15 or $20 or $30 per month for a $250,000 policy. So that kind of gives you a general idea. Whereas, like I said, whole or universal life would be at a minimum 10 times that amount. I think the only time that it makes sense to get some sort of permanent life insurance policy is if you have someone who's going to depend on you for the rest of their lives. And in my mind, that would be maybe a disabled child or something like that. I think in that case, permanent life insurance might make sense. So you could get some quotes, talk to some insurance agents, but then go over the quotes and the policies with someone with financial knowledge that you trust, like your accountant or your financial planner or a lawyer or somebody like that. And then the last question really is, how much life insurance do you need? And that obviously varies widely depending on who is depending on you, how old they are, and how long before they no longer need to depend on you. And so let's say it's the case of your spouse where you don't want to leave them with a mortgage that's unmanageable for them. You just match up. You match up the length that's left in your mortgage and the amount that you have left, and you buy a term policy for that. Because you can buy 1 year term, which is the most inexpensive, but you can also buy term insurance that is guaranteed premium over, let's say, a 15-year term or a 20 or a 30-year term. My first insurance policy I got when my firstborn was about 6 months old, and we still had, 27 years left on our mortgage. So because he was so little and we had such a long mortgage, I got a fixed premium life insurance policy. So that's going to be more expensive than a 1 year term, but over the length of the policy, it's going to be much less expensive because as you get older, term life insurance becomes a lot more expensive, especially as you hit a decade, it goes way up. And so if you're looking to cover the cost of raising your children, because you don't want to leave your remaining spouse to do that by themselves, you want to calculate how much it costs to raise them approximately. and for how many years that they would need that money. If you want, you could add in the balance left on your mortgage if you don't want your spouse to be burdened with that, and maybe add in the cost of their college educations. And so I know a lot of people have life insurance through work. You might have a policy that's, $50,000 or $100,000, but you need to really consider supplementing that, because $50,000 or $100,000 is not going to last a long time if you're raising a 5-year-old child. So think about what you need. I mean, a really rough estimate to start with might be something like 8 to 10 times your salary. And even that is not a huge expense. And it gives you huge peace of mind. You want to make sure, if you're supporting someone now, you probably love them and you want them to be protected in case you die. And so the relatively small amount you pay on life insurance, in my mind, is well worth the peace of mind that it gives you, knowing that your loved ones are going to be taken care of in the event that you die. Okay? So I hope you enjoyed my talk about life insurance.